Okay, hello everyone and good morning and welcome. My name is Richard Hope. I'm head of EMEA at Hamilton Lane, and I'm delighted to be here today for this keynote interview with Virginie Morgon. We're going to be talking today about investing in the post-COVID world. Virginie has a long career in the private equity industry. She's a fascinating person and a wonderful executive, and so we're very excited to have this discussion today. So welcome, Virginie, and thank you for your time.
Thank you, Richard.
Good.
Very
And
nice
so
introduction, kind words. Thank you.
thank you. So we're going to kick off the discussion initially. You're CEO of Eurazeo, and you've been within the Eurazeo business for now 12 years. So please just tell us a little bit about what is Eurazeo, and what have been your sort of key strategic objectives since you came to CEO a few years ago.
Thank you, Richard. So Eurazeo is an investment manager with 270 people, 10 offices worldwide. This is really what we want to be, an upper, mid-scale investor close to our companies and being able to provide global reach and the internationalization. We're very responsible, very committed and engaged, and I believe that we're providing very strong value add to our investment. It's about $20 billion of assets under management. 70% of those are private equity investments. So we're basically the partner of entrepreneur management team to be fast tracking their development. And the major moves that I have supported with my team and with the group over the last 5 to 6 years, I would say, I would summarize saying, for sure, diversification of where we were 5-6 years ago, many more investment strategies. Second, internationalize the group. 10 offices today, strong presence in Europe, strong presence in the US, and strategic partnership in Asia and China in particular. And third, grow our client base. Permanent capital was where we're coming from. Now we're having not only permanent capital and long-term capital, but also more than 13 billion of clients who trust us and invest with Eurazeo. So scale and diversify, so de-risk. That's what we've done, and that's what I've been leading over the last 5-6 years.
Good. Well, thank you, and a nice way to start the discussion. Obviously, scale in this industry that's growing is so important. But maybe, if I may, a personal question before we turn to some of the investment questions. So, you've been CEO now for 2 years, but you've obviously been part of the executive board at Eurazeo for a substantially longer period of time. Is it different as CEO?
Life is always different as a CEO. And let's be honest. What's not been different, let's be honest as well, is that we've been evolving in a very volatile, uncertain, unstable, and pretty complex environment since early 2008, haven't we? So the new standard that I've been living since I joined Eurazeo, January 2008, is the hyper volatility, uncertainty, sometimes, complete lack of visibility, but you still have to be, going ahead and looking ahead. So that has not changed. What has changed on a more positive tone is how much private markets seems to be, leading and rebalancing versus public markets. I think it's only starting for our industry. That creates a lot of excitement. So I'm excited and very committed to having Eurazeo grow in that amazing environment, which is private equity and private markets.
Okay, thank you, Virginie. And I'm a big believer that a career evolves. It doesn't matter how much planning you put into a career, it evolves. But one of the key things about a career is there's often significant people along the way that are key influencers. Who have been your key influencers and why?
Oh, wow. I don't want to make, the long list, just like, at an Oscar or César, ceremony. I've been very lucky because I worked with partners for many decades, partners at Lazard for many years, and then, member of the executive committee at Eurazeo, as you mentioned. So I've been, helped and positively sort of impacted by many of my partners since 25, 30 years. There are some who have been, more present in my professional life over a very long period of time. And in a way, that's probably me, meaning that I'm very sort of very long term in my professional and personal relationship. And my chairman, Michel David Veil, the former CEO of Eurazeo, Patrick Seyer, one of many of my board members, Jean-Charles Decaux, Bruno Roger, they've been in my professional life for many, many, many years, and I know I can count on them, and they've been helping me a great deal.
Wonderful. So many great professionals around you, and obviously you've continued to impress them over many years. So congratulations. As I said at the start, this session's about investing in the post-COVID world. So let's go there. Cast your mind back to Q1 2020. It feels a long time ago now, certainly does for me. January, the cloud loomed in Asia, and then it came in sort of Europe and North America by March. What were they in the early days of that lockdown? What were your orders to the team, and what did it look like inside Eurazeo?
Well, it all started, there's probably two phases, but let's start with the first one, which is, 12th of March, probably till the end of April, which for us has been very much about safety first, of course. And as a CEO, as you mentioned earlier, that was my prime objective: safety first of my team and of my people within every of our investment and portfolio companies. That was immediate. Enormous responsibility, making sure that we were providing social and medical protection to all our employees, direct employees of Eurazeo, indirect employees of the group, across the board in our portfolio companies as well. Cash is king, of course. Crisis, you've learned from 2008, which seems yesterday, and that cash is king. So, and immediately plan for the worst and then hope for the best, but immediately plan for the worst. So cash was where we looked at in priority. Was the cash situation, draw your revolver, make sure that you have ample room to face what we don't know is exactly and how long it will last. So cash for sure. And then I would say, plan for at least 12 months of tremendous volatility, and take all the immediate measure to preserve your business. That's how I would summarize March and April. What was extremely positive, thanks God, in that 8 weeks, which were, sudden, violence, deep, immediate, very much different than 2008, is this enormous solidarity wave that we've seen within the group, but also outside of the group. And we at Eurazeo have been extremely responsible. Big solidarity fund being announced, 10 million euro, sizable, to be helping our portfolio company, our people, but also be on the first row of that crisis to help whoever needed it at the moment. And that helps us a great deal, because you were not just dealing with issues and concerns and being, uncertain. You were also leading the way with solidarity. That was great.
Okay, so you pull together, you're together as one, you're all supporting each other. And understandably, the portfolio is very important. Have you been looking at the portfolio all year, or have you been making some new investments?
That first phase, March, April, portfolio. Full stop. From May onwards, maybe a change of attitude, which is also related to how Europe has been evolving over those months. And you would recall that in many European countries from mid-May onwards, we're sort of back to a new normal, which is not completely back to where we were, but clearly the fact that we can reconnect some of our teams physically, that helps to be more creative and looking at investments again, reopening. So we move from defensive to maybe not completely offensive, back in May, but certainly a complete different mindset, opening up to a different sort of investment environment with, attention, being careful, and certainly betting at first on businesses which we thought not only had been growing in the past, but were also accelerating in the COVID crisis environments. But yeah, from mid-May onwards, more offensive in terms of mindset.
Okay, so we've certainly all had to be open-minded this year for a whole host of different reasons. But as you've looked to invest in those businesses, have you changed the diligence model, or how have you got your colleagues in your investment committee around you comfortable that actually there's investments that are worth making?
I mean, in Europe, as you know, it wasn't so remote. So we had an ability to, have some physical exchange and meet some of the management team in person. Not as much as you would have done in the past, but certainly still at some point during the due diligence, which was your question, Richard. In the US, very different though. It's changing now, or it has changed since I would say early September, but it was very different till the end of August, where no meetings were neither possible nor, let's be honest, welcomed. So it was interesting to be, to have to adapt between our European presence, where we were born French, we expanded European, but certainly our reach is now way more global, and you have to adapt from one geography to another. Even within Europe, as you well know, um, the culture and the attitudes has varied significantly from one country to another.
Yeah, we certainly, in our own business, we absolutely agree with that. Different themes happen at different times throughout this year. And so where Europe was open early, it feels like certainly North America has been open a bit later this year. Maybe change gear slightly. I'd love to talk to you a little bit about the investment environment. One of the phrases that I've heard many times this year is about the haves and the have-nots. Can you maybe just touch on that a little, either on the deal side or actually, interestingly, on the fundraising side, given the audience today, we have many GPs thinking about how to go raise capital in a world when you can't see LPs.
Yeah, or even on the portfolio, as a matter of fact. I mean, we have a very diversified portfolio, and that was one of my main objective when I took over. But even some years ago, diversification is key in everything that we do. And the haves have been, for Eurazeo, for example, all our technological investments. 25% of our assets under management, 25% of our net asset value is made through investment in technology. Very strong growth, acceleration during the crisis. 15% of what we have is in healthcare. A bit of impact during the first months of the crisis for evident and obvious reason, but then a strong growth from July onwards. So those are the haves for sure, and we can come back to it on the deal flow side. The have-nots, the question is more about how long, and is it structural or is it for now? The have-nots, about 10% of our net asset value. What is it? Leisure, travel, and every businesses which are related to those two. Significant impact. For how long? It really varies. hospitality, depending on which sort of hospitality you're looking at, is picking up. If it's more local hospitality, which is more dependent on long-term or international travel and business travel, unlikely to be picking up, according to a number of industry experts, before probably 3 or 4 years, which seems very long, say it from today. So these are, haves and have-nots of what we see in the different sectors. But clearly the haves have been accelerated, augmented, you could say. And we may come back to digital and digitalization, but one of the takeaway of that crisis is that it's unanimous in the industry, either the investment or the corporate. You've been able, if you are part of the haves, if you've been able to pivot your model to digital, you are really way more, you're strengthened following that crisis, and you've been helped by COVID rather than not.
Yeah, so let's keep this discussion positive and let's focus on the haves. And so, you mentioned digital and the move to digital. Obviously, thematically, growth investing, technology investing, they're holding up the public markets right now.
They are.
And they've captured huge attention for private markets. Where does Europe sit in that sort of sphere? And how do you as Eurazeo approach that?
I think it's an interesting moment for Europe, and that this sector or segment is going to be able to benefit from that crisis. Why is that so? For many, many years, decades, should I say, Europe has been a very big player in VC. And we as investor, Eurazeo as well, we've been a big investor in VC for the last 20 or so years. We were and continue to be backing amazing entrepreneurial team and project. We have well-trained team, amazing university, amazing engineers, all of that. So we were there. Where we were not very strong, and where most of the benefits were taken over by some of the US investors, was the growth segment, the follow-on in a way of following venture. And for a few years, we started 6 or 7 years ago, even a little bit more at Eurazeo, we believed in growth in Europe. And what's happening as we speak shows that it was very right to make that bet some years ago, because this acceleration is happening as we speak. A lot of demand, a lot of great projects, many more unicorns today than in the past 5 years. The rounds are much bigger, so there's more need of capital. We're talking more than 10, 15, 12, 20 rounds of more than 200 million euro every year now. That's unheard of. And because of COVID and this pivoting of many of our customer, many of our consumer, and many companies, there'll be even more need of that capital and that investment in the sector. So very promising, I would say.
So I'd love to talk more about that with you, but I want to turn to something that I know is personally very important for you, and that is sort of CSR and ESG. And so obviously Eurazeo as a business has made some very public statements around that. And so, 2020 stands for many things, but I feel this year it's the year where ESG has really resonated strongly around the world, not just in Europe. So can you just tell us a little bit more about your own firm's approach?
Thank you. I fully agree with what you just said. And 2020 is also an acceleration from that standpoint, which is a great outcome of that crisis. Never waste a crisis is what we have to, follow as an objective. And on that standpoint, ESG, CSR, that I was worried back in those, months of March and April might become less of a priority, not to us, but more generally. As you said, it's on the very first row of every investors' priority. The good news for us is we've been a pioneer in ESG and CSR. We started, a decade ago, 2007, 2008. And our new program, O+, is extremely challenging because the ambition is extremely big. O+ is about two main pillars of our new ambition in ESG. It's about climate and reaching carbon neutrality by 2040, and it's about inclusion. I believe that ESG is about performance, and performance is about responsibility and inclusion. I've always believed in this, and that's why we started so many years ago as a pioneer. My intention as a private equity firm is to remain one of the leader in that commitment in ESG. O+ is exactly that in terms of ambition. We're leading, opening the way, and we're taking amazing commitments for the company, Eurazeo, but of course, more importantly, all our portfolio company by 2030 as far as inclusion is concerned, and 2040 as far as net zero carbon emission is concerned.
Great, thank you, Virginie. Maybe I'd like to explore this a little bit more with you. And so one of the things that many investors that speak to us struggle with is, how do you measure all of this? And I know that's something that you've given a lot of thought around. And so you've come up with specific targets, 2030, 2040. So How are you going to measure progress within that? And what are you going to be telling your own investors about that?
Our own approach is exactly what you sort of mentioned. It's all about measuring where do you start from in terms of gender, race, gas emission. Everything has to be measured. Where do you start? And there's no shame to be starting from a very low or very high number, depending what you measure. What's important is the measuring as a start. We've been measuring for more than 10 years. Every of our efforts impact savings of gas emission, every savings. Where do you go from there, and how do you fix your ambition? As far as climate is concerned, which is, I believe, one of the most technical and most complicated pillar of the ESG, we thought that we needed to have the best ecosystem of advisor and challenger in a way. So we have decided that we would work with, according to SBT, science-based target, and that every year between now and then, we would have a third-party expert to measure and audit. So it's both the measurement and the audit vis-a-vis my clients and my stakeholders that we will provide and publish, basically. And at the end of the day, it's possible that because of the ambition is so high, that it may take me a few more years, or I'll be faster on some of my pillars, maybe in inclusion or diversity, and maybe a bit slower on climate, also depends on my portfolio. But what counts is where you're heading in terms of direction. By measuring every year, you're making sure that the track is correct.
Good, good. Well, we look forward to hearing how this develops. And I think you, given the measurement, are certainly far out there on the frontier, and hopefully many can join you on that. It'll certainly make investing in this industry a lot easier for all of us. This is a fascinating discussion. I'd love to go longer, but I'm maybe just going to come to you just for some closing remarks here, Virginie. So the industry has changed a lot since we both joined it, and it continues to grow, which is wonderful. But COVID also gives a time for pause and a time for change. So what do you think sort of private markets looks like on the other side of COVID? Maybe some thoughts on that.
I was, and I am even more positive on private markets than ever. And a few references to be supporting that that positive stance and that accelerated momentum in private markets. Public markets are extremely volatile. They have been over the last 10 years, but they've shown recently, if we needed another example of volatility, that they are. Second, only companies which a certain size and many engines of growth are, to me, suited to be publicly quoted. There's a lot of appetite from entrepreneur and management team to grow in a private market without the pressure of publicizing your results every 3 months. And a disruption is always easier to conduct being private than public, as an example. So there's way more demand today by not only our clients, the pension funds, the sovereign funds, the private wealth, the insurance companies, but also from our management team and entrepreneurs. So demand and offer are both going in the same direction. They feel more comfortable with private markets. Of course, the interest rate being where they are and remaining for very long periods where they are, that sort of zero yield environment pushes investors towards private market as well, because we've shown as an industry an alpha and an overperformance against public market, which is attractive to our client base because we all need to find returns. We're all looking for alpha and returns above the market. Private markets has allowed this for many, many years and will continue to do so. So I'm very positive about the trends that we have ahead of us.
Good. Well, we like positivity in a world that is increasingly negative. I'm going to do one last thing and give you one last short question. So I'm going to present you a magic wand. I don't have any props, so I will spare you that one. Where would you wave it and why? What would you like to change either in the world or in our industry today?
Okay, a vaccine right now.
Yeah.
You said a magic wand.
Yeah. I'm afraid there's thousands of scientists working on that one, and so yeah, we'd all love to achieve that. So with that, Virginie, I'd like to thank you very much. Audience, thank you for participating. You've heard from Virginie today. Never waste a crisis. I think that is sage advice. Virginie and her team are working extremely hard. She works in a very impressive investment business. And so we're grateful for everyone for joining today. Virginie, thank you for your time. And Virginie and I will both be available on the platform. And so please do reach out to us. We both work for big businesses and we'd love to tell you more about what we do and what we get up to. So use the platform, enjoy the conference, and thank you for joining.
Thank you very much, Richard. Really enjoyed our conversation. Thank you all.
Thank you, Virginie.